Hey, good morning, everyone. Marty Missouri here, 28th of November, 2021, with a very quick macro update for you. Week over week, our macro index saw a nice increase of 6.25 points to 35.42. The two needle movers were the Chicago Fed National Activity Index. It went from the negative to a positive, 0.76. This is an index within our index. Has 85 data points. This month, 61 of those were positive, 24 negative. So that basically was worth a 2-point move in our index. By the way, ours has 48 data points, and currently 50% of them are positive, 15% are negative, and 35% are neutral, which is quite the improvement from where we were, say, this time last year. The other positive input in our index was mortgage purchase applications rose nicely week over week, and that went from a neutral to a positive. So those two moves explain the nice jump in our macro indicator. The rest stayed as is. The other thing I wanted to work on with you this morning is our chart of the US dollar. Now, folks, you'll recall I've been making the case, for a long time now that a rising dollar would be negative for asset markets. And notice here that if you'll recall, I drew these Fibonacci retracement lines, and I talked about this 38.2 retracement as being typically pretty strong resistance. We had this decline from here to here, and as we retrace our way up, often if we're truly in a downtrend, we would fail at the 38% and then give back those gains. The 50% retracement is considered even stronger. As you can see, though, we blew right through that, but then came right down on it last Friday. So, folks, yes, we know about the new variant out of South Africa, the new COVID variant, and that has the world pretty nervous and pretty upset at the moment. Weekend, we'll call them betting markets, have been all over the place. I've checked it off and on. The Dow, maybe an hour ago, was looking like it would open in positive territory. Right now, odds say that it opened down 155 points. So again, a lot of angst over this new variant. Moderna, in an article this morning that I read, says that they are all over it, and they believe if necessary, they'll have a modified vaccine ready just after the first of the year. But again, from what I'm gathering, and I am anything but an expert on COVID, although we have to intimately track the numbers globally, as you might imagine. But what I'm hearing is that we just don't know yet, that the number of mutations is concerning. There's worry that maybe it will be something that will render current treatments and vaccines less efficacious, but that remains to be seen. There have been other variants that have shown up with great concern initially that turned out to be nothing. So we just don't know at this point, but suffice to say the market is going to move with the headlines. But as I showed you Friday, and as I'm showing you here today, the market setup was really somewhat fragile is a big word, but remember, a trending higher dollar unequivocally will be a headwind for asset prices, and that means equities, and that means a lot of the inflation trades that we are in right now as well. And it is something that I can assure you the powers that be want no part of. So as the dollar continues to rally, if it does, the dollar is going to have a lot of pressure from the powers that be here in the US to keep it somewhat at bay. Now, technically speaking, we've blown through these bearish divergences, so I can no longer say that this is bearish on the dollar. You can see the MACD has a higher high as the dollar has gone higher, as does the RSI, the Relative Strength Index. We are, carving out what looks like, pretty short term, but nevertheless a bearish rising wedge pattern, and we did break out of that here. Also, future speculators are very long the dollar, so they look pretty one-sided, and so if we get some negative dollar action, you could see them selling and we could see this thing come back down in a big way. On balance, by itself, that would be very bullish for equities and be very bullish for the other inflation trades that we're in. So folks, again, I think the message for today is the macro situation continues to improve, although, that data was compiled before the fear over this variant. So we'll see what that does to sentiment, and if we are seeing travel restrictions. If it turns out to be a real thing, we could see some shutdowns, and that would be, problematic for sure. And that's what has the market kind of freaking out. But again, technically speaking, and even, and then when we look at the dollar, equities were somewhat exposed to any negative news event. So it makes some sense that you get a little bad news and we get something unusual relative to what we've experienced of late to the downside. So folks, I'll close it there. And also, I just want to let you know that I'm going to get started early this year on our year-end letter. When I think about all the things that I want to, or we want to express in that letter, looks like it'll be a multi-part letter like it has been some years in the past. Lots to cover. You clients out there, remember, our primary objective, the reason we exist, is to have you comfortable with your portfolios amid a world that can be very uncomfortable. And then, of course, when the world makes us uncomfortable as portfolio managers, then we take extra measures to mitigate, big downside risks like we did last year and like we've continued to do since. So we want to tell our story as to why we still have those concerns. We want to also express where we're very optimistic about certain asset classes going forward. And we want to reiterate our long-term view of investing and of portfolio management. And that is, each and every position needs to make sense to us within the context of overall general conditions. At the end of the day, it's the big, longer-term structural dynamics in the global economy and in the global marketplace that's going to ultimately determine how we invest assets. What's going on in the world? What are the trends? What's changing? What's not changing? What are the historic analogs? And what makes the most sense based on that in terms of individual positions, and then how we aggregate all those positions and how they complement each other and so on. So for the year-end narrative that we're going to put forth, we'll break it into parts. Probably we'll start with the most important part, and that is the inflation narrative and setup going forward. It is vastly different than what we've experienced the last few decades, I can assure you. And I want to give you enough information there and data and justification for why we think that, and therefore why we're allocating assets in a certain way to accommodate for that going forward. But it's not an immediate all at once kind of thing. It's a building trend. There's going to be fits and starts. There's going to be periods where we look like we really know what we're talking about, like the current inflation setup. And then there's going to be situations that we can identify and periods of time where it looks like the deflationists have it right. So I'm going to build that narrative for you, bottom to top. And I know we've done a lot of that over the last year or so, but I want to do it within the context of our year-end letter. But I don't want each one to be, a book. I want them to be succinct and to the point. So we'll break them into pieces. Now, what I think we'll probably do is offer at least a paragraph or two on each one of our current positions, why we're there, why we size it a certain way, what the counter argument is to it, and so on. So folks, at the end of the day, it's basically fulfilling our commitment to our clients. Obviously, I'm speaking to you. We have non-client subscribers to the blog as well, but what I'm saying right now is really directed at clients. And that is, our commitment is to make your lives better at the emotional level. And the way I think we do that is to have you understand the world as we see it when it comes to markets and the economy, where the risks are, where the ice is thin, how we compensate for that, and where the opportunities are, and how we exploit those as well. Thank you as always for watching and listening. Hope you have a great rest of your day. Bye-bye.